Good morning, everyone, and welcome to the earnings call for the second quarter of 2022. Our presentation today will be conducted by Mr. Cristiano Aires, the CEO at Modal, and Bruno José de Castro, our IR Director at Modal. Before we move on to our directors, I'd like to have some initial remarks. This earnings call will take place in Portuguese with simultaneous translation into English. To access the simultaneous translation, please select the interpretation button at the bottom part of your screen and select the language. To keep up with the presentation and the material in English, you can select the presentation on the chat and download it. To submit a question, please select the Q&A icon. Write your name and company. As you are announced, you should enable your audio to submit your question. Now, I will pass on the floor to Mr. Cristiano Aires so that he may proceed with the presentation. Thank you very much. Ladies and gentlemen, good morning. Thank you for your interest in understanding more about Modal and keeping up with our story. We'll be here with you, and it was the second quarter that was a little more adverse in the semester, and as you'll see, we were able to keep up with our growth in revenue compared to the same period last year. We had a good increment of revenue as well when compared to the first quarter, and Bruno will show you more details on this as well. You can see that we had a small gap in the revenue, something around 10 and 15%, that ends up generating a bit of a deviation in the net income we were delivering to you in past periods. This is very well mapped out, and we know exactly what's the origin of this, and we've already been working on this for quite a while to be able to fill in this gap in the next quarters. I think one of the main important points I wanted to highlight here is the big focus we've had in the last quarters with the integration of all the acquisitions we've made. And naturally, of course, the most transformational ones like Live and W2 that really provide Modal as a service are the ones where we were able to have an important performance, and we just started announcing some important partners locally and even big multinationals that we should be disclosing in the next weeks and months. So besides all of this, I think it's very important also to take a look at this structure and this scenario. And we were very careful with our capital structure in this period. So we're ending this first semester with the biggest liquidity we've ever had, almost 2 billion in cash, with the level of leverage that we're really comfortable with at this moment in this scenario. We have about 1.7 in our credit portfolio. A good amount of this is collateralized operations internally, and also what we call originate to sell operations that are where we set up and place them and then we distribute them. So when it comes to new revenue, especially when it comes to how we're going to close the gap, we identified we were able to set up a new structure. We brought a senior group of market professionals to set up a more strategic operation with some special seats here. In the next 2 quarters, we should start having some important positive news coming from this area as well. This is also in line with the companies here, with our wholesale operations and our investment banking operations as well. And it's another way for us to also meet the needs of our customers, especially when it comes to small businesses like B2B, but also so that we can originate operations so we can have a good growth in our base of individuals and also institutional partners in-house. Throughout this last quarter, we've also advanced a lot in the preceding conditions for our deal with XP, especially now in July. We had the approval from the antitrust body CADE, and before the second quarter also in the General Assemblies with our shareholders as well. And Bruno will get into more details about this in the next slides, but I think this was my first initial message here to share. Bruno, our IR director, will continue. Great. Thank you so much, Cristiano. Good morning, everyone, and thank you for your presence in one more of our earnings calls in the second quarter. As Cristiano mentioned, we have some challenges that are new up ahead, but once again, we had very important performance when we consider all these challenges. We've already identified where we see our main gaps and action plans that we're going to be operating in a very propositional way based on them in the third quarter. So about the operational highlights, we ended with an AUC of 41.8 billion. This is a growth of 60% compared to the year-over-year analysis, a growth of about 6.5% in the quarterly comparison. It's a net fundraising of about 4 billion almost, and very close to our goals for the year. And this really reinforces the resilience of our ecosystem. It's very complex and diverse, as we've been mentioning in our last calls. And when it comes to active customers, we had over 600,000 customers active, and this is a pace of growth that is about 40% year over year and about 5% compared to the quarter-over-quarter variation. When it comes to revenue, we had a gross revenue of 224 million. Some of the important highlights here are with the ET portfolio and the capital markets, which demonstrate a level of constant recurrence in the revenue, which is one of the biggest challenges in our business model. And one of the gaps we've been working on strongly as well in the next months is really our retail flow work, which has been impacted by a lower demand, which is something very occasional. All of the statistics are public. Even B3 has been highlighting this in their monthly reports as well and operational reports. So when it comes to net income, we had 26 million as our net income, a little lower than the pace we've been reporting in the last quarters, but we're really understanding clearly what we need to do to recover our growth track in our net income. Once again, we are always searching for growth in revenue, but also all of the operational leverage opportunities and scale gains in the platform. When it comes to execution, I think we want to highlight here the resilience of our gross margin. We ended with 80% approximately, and we've been able to have a favorable mix in our revenue, but also some scale gains that are very important, diluting some of the increments in COGS that we were expecting that would happen this year as we were expanding, especially in our operation for B2B. And that once again demonstrates that we have been able to surf through some benefits of scale in the growth of our platform. When it comes to SG&A, we ended the year with about 90.5 million reais, in line with what we saw in the first quarter, at a moment where we, of course, need to go back to looking inwards and search for the budget discipline, but also an important increment in operational efficiency. And finally, we have some liquidity and capital metrics. We're going to be ending with a credit portfolio of 1.7 times net debt to equity. And when we look at our portfolio in December, it was 1.7 billion. But now on 30th of June, we're ending with 2.2 billion. So this is a growth of about 600 million reais. And I think this is a natural expansion in our credit portfolio, considering better use of our balance sheet, especially after the IPO, where we increased our capacity financially substantially, and of course the expansion of our asset base, which is a normal trend and movement that we saw during this period. Now we're at a level that's quite healthy and balanced out. We still have room, of course, to advance a bit more in this metric, but it's a level that is probably about 2.5 times that we could still search for. But of course, with a lot of carefulness and discipline, not losing track of the macro scenario challenges we're going to face, especially in the second half of this year with the elections. Finally, the Basileia index, which is about 15%, which gives us enough room to continue expanding our portfolio for credit, but also performing other initiatives in our business plan that eventually could require capital as well in our Basileia structure. But we're very comfortable with this level, and we can manage and work on the execution of our business plan. And then on the next slide here, we want to quickly just show you all of our step-by-step in the combination of our business with XP, and also remind you a bit of ever since the beginning. I want to remind you about some phases that are not even on this slide, but we signed an MOU. There was a binding MOU on the 7th of January. Then soon after that became the signing of all the definite documents on the 4th of May. Then we had the beginning of all of the processes and necessary preceding conditions for the deal. One of them was our initial general shareholders meeting, which decided on the conversion of the preferential shares into ordinary shares or common shares, and then migrating to Novo Mercado as well. And we want to highlight the significant presence in this general meeting, which really contributes to this vision also from our minority shareholders about all the benefits of the transaction as well. And at this moment, we're also waiting on the certification and signing from the central bank as well. With all of our minutes that also need to be certified and approved by the central bank, as well as the approval from B3 when it comes to migration into the new Novo Mercado model. We're interacting with both of them, and we have positive expectations to have this completion throughout the next weeks with all these approvals, and so we can move on to the final phase. To migrate into the Novo Mercado format. When it comes to the antitrust body CADE, we had the approval also with zero restrictions and a definite character on the 26th of July, and we have this operation complete. There's no other initiative that needs to be done on this front. And then we're also waiting on the approval from central bank when it comes to the exchange and control. This started on the 19th of May, and we're also undergoing some exchange of information with the central bank that has also been analyzing and dedicating quite a bit of time to our case. And on the final phase of our operation, we'll still have a second general assembly with our shareholders, and then we'll be discussing the incorporation exchange and the swap of these shares, which is the final phase really, so that we can actually have the swap of the MOTL3, since we're going to be in the Novo Mercado format. And when it comes to timeline, the best estimates that we have in the management of the company is the completion in the fourth quarter of this year, more towards the end of the fourth quarter, with the possibility even of slipping into the beginning of 2023. But of course, whatever we can to do to accelerate this on our side, and on XP's side, we've been really trying to move as quick as possible with all the regulators and entities involved, and they've been also really receptive and active in performing their internal due diligence processes. So when it comes to giving you guys an update on the deal with XP, that's pretty much the main messages we had to share, and I want to once again thank you all for your presence in this call and move on to the Q&A session. Now, we will begin our Q&A session. And I'd like to remind you that if you have any questions, you must submit them through the Q&A button and send your questions there. The Q&A session and the earnings call have officially been ended. Any questions that were not answered during this call may be submitted afterwards by the IR department by email. Thank you all for participating and have a wonderful day. Thank you all once again, guys. Thank you. Bye. Have a great day. Bye. Take care.